Good morning, traders and investors, and welcome. Roger Scott here. It's Thursday. It's August 10th. It's about 7:42. The market's going to gear up to open about an hour and 48 minutes to be exact with you. And I like to be as exact as possible. Now, before we get too deep into this video, if you're watching on YouTube, make sure to like and subscribe to this channel and post comments. Subscribe to my Telegram channel. Go to rogerscott.com/Telegram. And most importantly, I've opened up my VIP room. That's right, my live VIP room premium program for the summer for all members. Today is Thursday. We're doing it at 11 a.m. That's 11 a.m. and tomorrow at 11 a.m. Monday through Wednesday, it's at noon. Thursday, Friday, 11 a.m. Eastern Time. You're all invited. You could find the link above or below this video. Now, let's get into all of this good stuff, right? So as you can see here, the Dow's up pretty good, about 163 points. The Nasdaq's up about 88 points. This is definitely beyond random. Now, coming into this morning, just so you know, take a look at semiconductors. They're breaking lower. Very, very bad sign. Very, very bad sign. Now, I know the market's higher this morning, but we are breaking down. I'm also keeping my eye on here, Nvidia. Now, Nvidia is one of the biggest semiconductor stocks, and it had some positive news the other day. And what did the stock do? It went down. It didn't go up on positive news. It had some positive AI news. Now, if you recall, 3 months ago, 4 months ago, if somebody talked about AI and a tech stock, it just shot up. It's not happening anymore. That sentiment, that AI revolution, it's happening right now. It's over. It's done. It's done. The stock had positive AI news, and the stock went down yesterday. Couldn't rally. So I think that this momentum level that the tech had, based on this AI revolution, that's not really going to pan out for a long, long time, is not going anywhere. And if you look at the QQQ, it's not far along. It's making lower lows. Look at this. Lower low, lower low, lower low. I mean, even low. So if today this breaks down, we're officially moving lower. And I hate to say I told you so, but do you remember I told you about this line that we drew here? And if you look at the Dow, you will see it's bypassing that line. It's bypassing that line to the downside. If you look to the SPY, you will see it's bypassing that line. It's going to be very hard to rally above that line right now, above those levels right now. And here's the QQQ. You could see it for yourself. So it's a problem. It's a major problem. And the rally that was caused by really, really good earnings, a lot better than expected, and this AI is going to change our world in 24 hours, nonsense, it's done. So I'm starting to see weakness in semiconductors, and semiconductors account for a big percentage of tech stocks. So if you look at XLK, for example, you will see we're almost at that line. Do you remember I drew this area? We're almost there. So the fact that we're opening higher isn't very significant. I mean, we dropped 1.29%. We're only up half of that right now, or a little more than half of that. I'm still seeing downside, and I'm seeing deceleration in the technology, in the semiconductors, in the software. Pretty much all of the stocks that rallied due to that AI revolution, just not seeing it. Microsoft, I thought we were going to come back. We never did. See that? Look at that. Look at the length of this baby, and then look at the length of most of the pullbacks. This one is a lot lower, a lot longer, excuse me. It's about 3 times or 2-3 times the length of most of these pullbacks. So we got to be really, really cautious today, really cautious today. Now, today we have the CPI report. That's coming out in about 45 minutes, 43 minutes, give or take. We're looking at 4.8. If the number is higher than if the number is, say, 5, and also CPI, the year is 3.3 or higher than 3.3, that's expected, that's going to tell us that the Fed's plan is working, but not fast enough. And if it's not working fast enough, they may say, well, we may want to increase rates, or we're going to hold off, but there's a higher chance we're going to increase rates. But if this is lower, if this is, say, for example, 4.5, and if this is 2.5, for example, then it means what they're doing is working. And that number where it's like 85%, they're not going to make any action. It's probably going to go up to 95%. And it would probably cause the market to rally. So keep your eye on the bond market. The problem is we're still in a major downtrend. I mean, we're still in a major downtrend. And this little upside right here that's not even going halfway and it's already overbought is making me nervous. And to me, it feels like we're going to turn right back down. Remember, Fed not taking action doesn't mean we're done with this type of an environment. It only means we're moving in the right direction. Now, today we have to watch. We had Disney earnings yesterday. Today we have BABA and nothing really else but BABA. That's the big report. We're going to keep an eye on the stock because the stock is near. It's right now up to 98.65. 98.65 puts it right here. If the stock can go above 104, there's a great chance the stock is going to break out and start testing some major levels. Although I'm not sure that's going to happen. The more likely scenario, unless earnings are just amazing, and they're not, the stock is up 4%, it's not up 40%. I think it's just going to top out here and start coming down. So keep an eye on BABA today. Keep an eye on the CPI. Keep an eye on the bond market, all right? Very important. Now let's talk a little bit about the broad market, and we'll go from there. I want to show you some technicals. And remember, today's Thursday. What's the most important top ETF and option? We're going to talk about it today. So we're gearing up for hot U.S. consumer inflation data, the CPI, that's coming out, and tomorrow PPI. That's a big report. The Fed uses the core CPI and PPI in their analysis. Tech, benchmark S&P, and Nasdaq fell to a 4-week low. I wonder who predicted that was going to happen. I wonder who drew these lines right here for you guys. When the Nasdaq was peaking out and told you it was going to come down and told you that we're in major areas and showed you the Russell about 2 weeks ago. Yeah, it was me. Let's continue this. Told you it was going to happen. Nvidia Corporation dropped 4%. AMD dropped 2%. And the news that caused them to drop wasn't really all that bad. Energy stocks are gaining ground. Inflationary pressure. I told you energy are going to go for another round. They're now making 8 3/4 month high. So I like energy stocks right now. We may have to talk about that when we talk about our top ETF, hint. Now, there's still an 86% probability of no rate hike. Now, not last period, but the period before, it was moving like from 90% to 60%, 90%, 50%. Now it's not moving at all because it's pretty certain they're not going to do anything, which puts the economy in less of a speculative nature. Less speculation means more congestion. Markets trend better when there's more speculation. When there's less speculation, there's less trending, which means the market could be gearing up for nice consolidation, especially after the moves it had. I mean, look at this. And that's what I was saying. After a move like that, at least consolidation or a reversal, probably a reversal like we're seeing now, but a long-term consolidation would not be out of the question, at all. Core CPI, jobless numbers, they've been, I mean, unless the number's like 280,000, 300, it's not even worth talking about. Luxury and travel stocks are doing well in America and in Europe, even though energy's making all-time highs, or not all-time highs, 8.5-month highs. Europe is up this morning. Corporate earnings, they're looking at U.S. inflation data this morning. But again, the fact that luxury and travel stocks are doing good, even with energy prices moving against us, because if energy prices are doing good, luxury and travel stocks don't do well because to go to travel places, you have to use energy. And China's not doing well, but that's a good sign. That's a really good sign that travel and luxury stocks are doing well. People want to go out. It's like COVID revenge right now. China closed slightly higher, support from energy-related stocks, although a sense of caution prevailed due to ongoing concerns about the troubled property sector and the impact of Sleepy Biden's ban on investment Chinese technology. Biden said on Wednesday that he's prohibiting certain new investments in Chinese technologies, including semiconductors. That's bad. That's bad. Japan, strong corporate earnings resulted in boost sentiment ahead of U.S. inflation. Data on Thursday showed that Japan producers' inflation decelerated in July on a year-over-year basis, making it the 7th consecutive month of easing, primarily due to lower energy utility costs. That's great. I have big plans for Japan. I'm thinking of investing some money in Japan. I think their interest rates are going to go higher. I think they're going to completely change their approach from a low interest rate environment to a high interest rate environment and not worry so much about exports and imports and worry about creating real wealth within its environment. Disney's up a little bit. Global Payments is up a little bit. Nothing major today. No major earnings. I already told you BABA is the only one that's really reporting. If we look at our major sectors, which we will do right now to get you guys started, remember, you want to look at the bond market today, and you want to look for more downside in the tech stocks. And I'm going to give you a little tip. If you see bonds coming down after the CPI, there's probably going to be some negative connotation towards the chip and the tech stocks, because higher yield, lower bonds, higher yield is bad for tech stocks. So if the CPI is good, and if the bonds rally, that's really, really good for the stock market today. But if the CPI is a little, and if the bond markets start cooling off, and if they start coming down, if the bonds go down from -2 to say -0.50, or that's bad. That means you're going to see less upside in technology stocks. All right, so let's talk a little bit about, but again, I wouldn't be holding my breath for a rally in chip and tech stocks to last right now. Let's go to sectors. Let's go to different sectors. Short-term sector scan. So energy is the number one under the cumulative. Under the sixth week, energy is the number one. Under the 3 week, energy is the number one. And after the 1 week, energy is number one. And energy is, like you just heard, is making an 8 3/4 month high. So if we go to Stock Fetcher again, and we go to S&P 500, and we go to the cumulative, and we go to charts, let's see what the first energy stock that comes out. The first energy stock that comes out. First one, let's see. Let's see. Right here, Quanta. Right here, Power. Power. And I love this stock, by the way. And let's see what the next one is. Let's see. By the way, I love GE right now as well. Marathon Petroleum is looking good right here, although I like PWR better. Well, anyways, I can't seem to find them because I just realized we're looking for ETFs. But if you do like the stocks, I like Power. I like Power. But ETFs, there's no competition right now. It's energy, and more energy. And I think there's really nothing even to look at. And I think the fact that we're breaking out and we're holding up is very positive. And don't say I didn't warn you about this, because I did. We'll go out about, say, how about we go out 29 days? And if nothing happens in 15 days, you promise to roll over the option or just get out of it. We would be looking at the 89 strike, and you can go ahead. I give you permission to sell the 93 strike. If you buy the 89 strike, you could sell the 92 or 93 strike, but make sure you get more than 50 cents for it, all right? If nothing happens in 2 weeks, just get out of the position, all right? Folks, be careful today. The CPI is going to be very impactful. Keep your eye on the bond market. If the bond market starts cooling off, it's a bad sign for technology. If it starts rallying like a bat out of hell, it's a very good sign. But overall, I'm not liking chip, technology, tech stocks. They seem to be cooling off. And the news that really caused it to rock and roll, like AI, we had some positive AI news on Nvidia. Look, let me see if I could find it. News and headlines. Robotics, can AMD dethrone the Nvidia as the AI king? Announces new AI chip and software solutions right here. An hour ago, and then a couple of days ago. Nvidia, other AI. I can't find the story, but they had really good news, and I'm not seeing anything positive. So I don't think the AI is having as big of an impact as it did 2-3 months ago. I hate to say I told you so. Bond market, technology, and energy. Bond market, possibly to the downside. Technology, hopefully not to the downside, but it's getting nasty out there. And energy to the upside. Be cautious, and blue chips are outperforming everything. Before I let you go, the secret has finally been uncovered. Mr. X was outed on Thursday as Garret Baldwin. I didn't even know that. Garret just revealed his newest income strategy. It capitalizes on big money stock purchases made by C-suite movers and shakers investing in their own companies. That's generally only one reason a CEO or CFO will invest in their own money in their own company, because they believe it's going up. These people know every detail about their company and profitable potential or not, down to the very last dollar. I mean, if they don't know, then who does, right? And on Friday, tomorrow, he's going to reveal the ticker beyond his next executive payout. And I'm going to join him. This is going to be fun. I'm going to join Mr. X. Who knew? Click the link below. Save your seat. It's happening at 1 p.m. tomorrow Eastern time on Friday. What's not to like? My VIP room ends at 12. It'll give you a full hour to get there. link to the VIP room above or below this video. Subscribe to my Telegram channel. Post comments below this video. And don't forget Garret Baldwin tomorrow on Friday. Now, you want my small cap stocks for the day? The big movers? Capri. The stock is only up 57% right now. Could be a very nice reversal. It's filling in the gap right now, or could be a big runaway. That's one. Next one is VTGN. The stock is up only about 10% now. It really rocked. It looks like it's coming back down right now. It could be a nice gap fill here. And to the downside, ORGN. The stock is down 54%. Looks like it could be filling in the gap. These small stocks are good scalpers and quick moves. Now, before I let you go, make sure to like this channel, subscribe to us on YouTube, like our channel, and comment. I'll see you guys tomorrow. Bye. If you like these small cap plays, let me know. I want to know about it. Bye.